Okay, good stuff. Well, I guess we're on the hour, so I'll get started. Okay, so my name's Steve Ruffley, steveruffley.com, premium presenter on FX Street for 10 years, I guess now. So, okay, pretty tired tonight, being honest. I've had a few days of late night trading, obviously being the opposite side of the world. My kind of view at the minute is just carrying on from my inflation theme that we're in a brave new world that has been totally created by the Fed and by the central banks and governments of the world. And how do we deal with it? What do we do? What's going to happen? So I think the main thing is that we've all realised that it's great, being born at a certain time or having an asset has been a good thing. But the reality is, what happens when these assets become too much, when you can't afford them, when you can't, kind of keep this whole big lie, as I've kind of coined it, going, that we can have all these companies that are surviving on, pretty poor earnings or average earnings. And, we have all this reliance on debt through every aspect of society. What do we really do? How do we kind of get out from under what we've created? And it's difficult to know. The world's become ultra reliant on these very low rates and this big lie and this big idea that free money is going to be around forever. I mean, it just isn't true. Everyone's lived through a cycle of some sort and knows that things go up, things go down, and that's the way markets are meant to be. That's how the markets just are. That's everything they're all about. Things go from not necessarily boom to bust. I mean, the boom to bust is quite an extreme way of looking at it, but things move in cycles, and that's things we can't really get away from. So how do we transition out of this ultra low interest rate environment where we've kind of let a lot of people, a lot of companies, a lot of aspects of society, benefit from something that just isn't available anymore. I mean, we've all seen, like, again, a common theme of the housing markets. It's like, yeah, you bought anything 5 years ago, 10 years ago, 20 years, 30 years ago, you're doing great. But what about the people that are, buying things now? It's kind of, what's the outlook for them? People are getting mortgages of 25, 30 years. What's the reality going to be like if rates come anywhere close to normal? How's everyone going to be able to to pay for this debt, and then also all the knock-on effect to inflation and paying higher prices. It's all great seeing your house go up on paper, but when you spend another 20, 30 quid on your fuel bill and groceries, etc., etc. Obviously, that means different things to different people. I could care less; it makes no difference to me. I'm rich, but it's not really about me and what I do anymore. It's kind of thinking about what's going to be left for the rest of the world, the future generations, and the people kind of coming up. So difficult questions are going to be had, and difficult things are going to be answered by people that really have no interest in answering these questions, which are great politicians. But what's the reality going to be in the market? What we're looking for. What's going to kind of pushes into kind of a fundamental thinking, what's going to push into some trades. And really for me it goes back to basics. Again, I'm kind of concentrating on things being overextended, things kind of pushing value, things not kind of making sense. I mean, look at the charts right now. We've got the FTSE way out there. I'll probably just close this trade I've got actually. Second. Yeah, it's a little fun trade there. Let me just close that down. So yeah, I mean it's kind of interesting, isn't it? It's kind of think from these 8 products that I've focused on for my entire life. What's gonna make the money. What's gonna kind of get me interested. What's the future going to be? And I think for a lot of the time I've spoken in these webinars, I think I've stressed for quite some time that I've started to unlearn a lot of things and kind of just stop reading things as much and stop kind of buying into the whole kind of media kind of hype and the media kind of understanding of this is what's going to happen, that we've got it all under control, we know what's going on. We'll do some forward guidance for this, for rates, for growth. We understand the problems of the pandemic, and we don't. The pandemic's been a real eye-opener for most people, I think. Most people are happy living their ordinary lives and, kind of just getting by and doing what they need to do, but you have your freedoms taken away from you. and you can't move around as you used to do, and do the things that you enjoy. People start thinking a very different way, and I think a lot of people have lived a fairly luxurious average life. You might be able to the one that oh, I turn left, I can upgrade to business class, and you think it's something special. Well, you can't fly anywhere when there's no planes. You can't fly anywhere when you can't go anywhere. It's a different world we live in now. Very few people can just get in a private jet and do exactly what they want, and that section of society will never change. They will do exactly what they want, and they are doing exactly what they want, and it's whatever's left for the rest of us. So, what are they thinking? That's really my kind of point right now, and I've been very clear of the kind of people I've worked with in the past. Run family offices for billionaires, people richer than God. And, I know how these people think and what they're doing, and they don't care anymore. It used to be, for them was all about, protection of assets and, against inflation and these crazy, ludicrous rich people, 1,000-year plans. And they don't care about that anymore. They're already richer. And, but, these guys can make, huge amounts of money because they control everything. There's no real kind of, surprised that this whole supply chain issue and nonsense that we've put on this kind of effect of COVID is just basically shipping magnates and people that are the producers, people that that are the owners of these things can put the prices up to wherever they want because there's always inelastic demand, isn't there? End of the day, people will always buy things, people want to always do things, and that's what they do. So it doesn't matter really what the price is if everyone's sat at home doing nothing. They're going to do something, and that's spend money. So how does that filter through to the markets? Well, the way I see it is that the dollar is going to remain king. The dollar is going to really. There is no bad news for the dollar. Unless the world unravels and there's nothing left, nuclear war. The only thing left will be the dollar. So inflation's real in America. I think they've learned a lot of lessons from 2008, and they're going to continue to protect their fragile economy and their fragile egos, but that's going to relate in a higher dollar because the options are zero. The options are, where are you going to put it? New Zealand dollar? No thanks. They're the first ones to put interest rates in the OECD, and the idea these guys have got any clue about anything, is ridiculous. These people are literally, some of the stupidest people I've met, and I live here. And I'm not stupid. So the idea that their currency is going to fly off, and go up, and they're going to do these another 5 rate hikes by November next year is just nonsense. It's not going to happen. So you have to think about again. New Zealand's 5 million people. What's the US? What's the UK? We're talking about numbers, economies of scale, etc., etc. So things that I'm focusing on are what the real big players are looking at, what the institutions, what's the new scourge of the world, family offices, kind of rich, ultra rich people banding together and making decisions based upon their collective power, and the 0.01% of people having more than probably 8% of the world. That's what I'm looking at because that's what I know, that's what I've dealt with, and that's a big factor in how I look at my trading. What are the guys with the real money that can move the markets doing? So I mean, I guess the dollar. It's I've always said. I mean, if you ever listened to me in my webinars, I haven't really deviated from what I've said. For 10 years. You dip buy the stocks, you dip buy the dollar, you sell gold high. So if the dollar's going to go up, then I guess we look at gold in a minute. But conversely, that's going to go down, even though it is a hedge against inflation, old people terms, and what is this hedge against this new inflation we've seen by printing trillions of dollars. It's not the same economic model. It's not the same kind of understanding of why we did things and why we think of things. So we start to look at like the charts and the monthlies. I've said for a long time, that the 110 was always cheap in the dollar. And again, we have this, steady kind of, people love to call these things like, like a little, call it a flag, a descending, a trend channel, whatever it is. But, the value is where the value is. It's the world's currency. We price commodities in dollars. The dollar is king, no matter what anyone says. Forget Bitcoin. Forget all these kind of, other ideas about, China having its own digital yuan and stuff. The dollar is the dollar, and it's not just the dollar in the US. It's the dollar in many countries you go to. They want dollars and pounds. Even euros. As crap as the euro is, over their own currency. So the dollar's going nowhere anytime soon. So been to the lows, been to the highs, do your basic Fibonacci, and I would say look at the monthly chart. We're steadily above the danger zone. 80% of the time, a strong directional move will retrace to 50%, so it get below it here. I guess we can kind of, put that down to different circumstances of, the world was a different place, Trump was around, and all the COVID was in its infancy and that kind of stuff. But we rejected all the kind of lows, and we've severely rejected it here, and we started on this upward path. So the only logical thing is what doesn't go down goes up. So I'd say that 126 and above in the dollar is absolutely doable. I mean, the Fed, no matter who comes in as the next chairman, is chairperson, should I say, through PC, because women can do these jobs now. Again, I'm not sexist. Right person for the job is right person for the job, but it is what it is. But I would say, kind of really for me, from a basic of technical understanding, I would say that there's more upside room in the dollar than downside. So again, cycle down to your weekly charts. Market moves up, consolidation. You see this key levels, 32, 38.2 here, Fibonacci. And we've touched the 23.6. I mean, that was just drawn on just, literally from line of sight and just from, a kind of a higher time frame chart. But again, it's amazing, isn't it? If you had that amazing, kind of technical ability to pick things when things were happening in the hourly charts, 15-minute charts, lots of money to be made. People forget the basics. I draw these things on, kind of by line of sight and just by looking at them because I've just done it for 20 years. But it's amazing how these things work time and time again. So even like this little Fibonacci they've already got pre-drawn, again, it's doing fibs within fibs. Look how the lines start to make sense, how we get back continually to the shorter time frames of the 50% that pivot, markets go up, markets go down, but eventually the overall trend, the overall sentiment sends these markets in direction. So I would say easily, 114.5 is a good level for a breakout. And this is it. We're never buying and holding. I've done a couple of presentations today and a few different kind of webinar series over the last kind of, few weeks. And it's really, I'm never trying to be right in direction. Yeah, I could buy as many dollars as I've got here and hold it to here. I could make, millions. But I don't do that. That's not what I do. That's not what that's not what interests me. I'm more interested in kind of, seeing dips around these levels where the lines kind of like make sense, averaging in, watching, kind of markets bounce back. I don't want to be sat here for days and days and days watching the P&L. I want to be involved in the action, the speed, the movement. And you can do that in the 15-minute charts, do it in the 5-minute charts. Again, you can be counter to me. Think, Steve, you're talking nonsense. I'll sell it because the dollar's finished, America's finished. Fine. Well, then you buy it back here. You sell it, you buy it back here. At least with some sort of framework on your charts and some understanding of the bigger picture, you've got an idea where the market, has been, where it can go. And that gives you, at least some sort of edge. At least it's real. This is real. Whatever you draw on your charts, it's real. Whatever you read on, any kind of news source, Warren Buffett doesn't come out and give you a call, does he, and say, hello, mate, I'm going to buy some Coca-Cola shares. You in? It's like, no, he's already done it. He's already done these things, yeah, and that's the way the world works. The people with the money, the people with the strategies do these things. They put the trades on when they're doing the opposite of what people think, and then they start to filter it through into the market to make you buy into what they think, or maybe say the contrary and kind of, to speed the movement up a little bit to get more into the trade and then turn it around. So I'm not saying fake news. I'm not saying the world's against us, but nobody out there is giving you free information except for Steve Ruffley and telling you the way it is, because I don't care. I honestly don't care. You cannot believe how much I don't care. I've done thousands of webinars. I'm literally coming to the end of my career with webinars. I can't be bothered anymore. I can't keep saying the same thing over and over again and try to repackage it in some, new exciting way, that's going to get people excited and, and interested about trading. I don't care. I don't care. If you want to trade. I will just give you the best of my ability to tell you there's a couple of things that will make you a good trader. That's being able to control your temperament, be able to control your emotions and how the markets make you feel, and having a decent account. I had somebody come to me the other day and say, Steve, I'm really interested, in your mentoring. I took the STA exam, cost me $2,500, and I've got 100 quid to put in the market. Pow, pow, what can you do for me? Well, stop you right there. I can't do anything from you. What do you want me to do? I'm not a miracle worker. What's £100 going to do? That's the kind of money you stick on the Grand National. A punt. It's not going to make you a trader, is it? It's not going to kind of, change your life. So this is the thing that I'm kind of at with the minute is, trying to tell people that the opportunities are right there in front of you. I mean, that was just a little boredom trade, and I very rarely do boredom trades because I can't be bothered. But I've just done an 80 lot trade in the FTSE, probably 80 lots more than the average trader puts on, in a single trade ever. And you just do it because, the size is nothing. It's like, well, okay, the DAX, not doing anything. S&P not doing anything. The Nasdaq, yeah, okay, creeping up a little bit, but the FTSE spiked. Okay, well, the pound, if that was lower, I get that because the FTSE becomes cheap, but it's bounced off the lows and it's just here. So a little cheeky, 15 pip, while I'm waiting for the webinar to start in that. And yeah, only made what, 150 quid. Isn't worth my time, isn't worth pressing the button. But this is the whole thing. It's like money's there to be made every single second of every single day. You just have to do something with it. And it's kind of like, yeah, press the button, make some money, not going to change my life, not going to do anything. But if you don't do anything, you never get anything back. And this is the whole point. So many people are doing so many things in the markets, investing so much of their time in, expensive courses and their education and the learning of the markets. And the only real way to make money in the markets is by making every pip count, by pressing that button for a decent pip size, where if it moves 10, 15 pips, yeah, you might make 200, 300 quid. You might make £1,000, You put some decent size on, you can make a couple of grand. How long does it take you to do that in a job? Well, if it takes you longer to make money in trading than do a job, keep doing your job. Yeah, don't bother trading. Just literally don't bother. It's not something to play around in. It's not something to kind of, just do as a hobby. It just is too hard. What it is something to do that's going to, again, take you to the next level in your life, financially, mentally, whatever it is. It has to be bigger than just making, a couple of hundred quid. You have to be making, decent amounts of money to make your time pay. So as the dollar, I say, goes up, the gold's the other one I've been focusing on. I didn't trade this the other day. I just kind of watched it. But again, it was a classic, 50% reversal trade. The market spiked up, dollar's going up, so gold should come down. And 8% of the time, strong directional move, trades to the 50%. So it's like, well, yeah, it could have been a 4-hour trade. But, really, you could have made just as much money. Kind of if you're very, very, kind of aggressive, selling the highs in the, the second hourly spike. And, it's a good looking trade. But, people forget that, the more you see, the less you can get out of a trade sometimes. You see the market going up and you could put it down to a piece of news or people are thinking, why has this happened? Well, markets move because they make people money. So gold is a very expensive product to trade. And if it goes up and it's going up for no reason, then people get out of their weak short positions and, and I just watch the market. So the market goes up and then comes back down. But again, it's so many times, I love this whole idea of 80% of the time a strong directional move, which is only basically an hour. When you look at the 15 minutes, an hour and 15 minutes, and it closes below, and you can get out the 23.6, you can get out the 38.2. You can hold on with Brave and get back to the 50%. But that says to me, it hasn't attacked the low, so the move's still intact. So it's going to, again, hold on the 50%, hold on 38.2, hold on 23.6 and make a new high. So, right now you can trade it to here to make a new high. That's your trade. Trade it from here to make a new high. Okay, but you can't sell it now because what's the point? All the opportunity of selling it was back here, but it was there for you. Absolutely. It doesn't make a new high, so it has to get back to that 50%. And it does. Yeah, not for very long, and it holds it twice. So again, the overall trend and uptrend that we've seen in gold is holding because it's a buy everything world, isn't it? Everything that you buy makes more money. And that's what we've happened, with inflation and, printing money, to infinity. But, again, it's an easy thing to look at, just putting simple fibs and simple kind of, framework around movement of any significance, does still work. And, again, it becomes not boring. Trading should be predictable. And it should be predictable for you. You should be able to look at any single market there and think, yeah, I have an understanding of why that's happened or an understanding technically why that's happened and where I can make some money out of it. And, again, if you're thinking anything longer than an hour, then you're not trading. Well, you're not trading. You are trading. You're not scalping anymore. Scalping has to be a short period of time. It has to be, some sort of technical reason, some sort of, size of candle, some speed of movement, or even some lack of movement. Because again, you have to remember, the more you see in a candle, the more the market gives you, the less opportunity you have to make money from that, because the market's showing you what it's doing. When the market's done nothing, and to the right of the screen, you've just got black. Well, the more it goes up and down, that's the more risk and the more kind of reward you take, because you don't know what's going to happen. You haven't seen what's going to happen because it hasn't broke out. So this is it. Again, it's going back to this whole idea of, I don't really understand what the world's trying to achieve, apart from saying everyone can borrow cheap money forever and everything's going to go up. At what point does that stop working as an economic or moral or, kind of societal model? I don't know, but we're coming close to the end of it. Because as I've said before, everything's just a cycle, isn't it? We can't keep printing money forever. We can't keep rates low forever, and we can't just kind of have people making more money a year in the house than they earn. I mean, you have to remember, if inflation's where we really think it's at, it's probably more. So, did you get a 10% pay rise last year or this year? Probably not. Well, that's probably closer to where real inflation's getting to. And it's all right, yeah, your assets might have gone up, but your pay packet, the money you get paid, doesn't go up. So at what point does that all start to unravel and people can't keep up with the pace of inflation? So we all know that growth, is going to bounce back from this man-made COVID exile that we've been in, but it doesn't mean it's going to go back to pre-levels. And whatever, the big jump is, be it, 5, 6, 7% or whatever made up number, which they are these days, made up numbers, is put on it. Does that really mean that's going to filter through to the economy and people are better off from it? Because they're not. This is the real thing. So really for me, again, it's by, discounting a lot of news and, kind of not really paying too much attention to who's saying what and why they're saying it. And just, again, going back to the basic rules of these 8 products. If you can put a Fibonacci on these things, or you can, see some movement, you get some less money from the more you see, or when you see a breakout, ride it a little bit longer. There's still money to be made. It hasn't really changed, since I've done these webinars full stop. We sell the euro high. They just have a different model than the rest of the world. They're crippled by, interest rates. They're keeping them low. They never will raise them too much because they're just too indebted. So it's always a sell the euro high, but it has to be high. It has to be selling it when it's green, like not necessarily selling it for the break. That's more difficult, I would say, but selling when it's high. Buying the dollar low because it's the world currency. It's intrinsically institutionalized and ingrained in everything we do. The pound's had a bad time. We've had Brexit, we've had coronavirus, we've had, the sleaze and the untrust, but at the end of the day, the UK is resilient. We're back. I've lived in the UK, I've lived in Europe as much as I've lived in the UK, and I much prefer Europe than the UK. But I still believe the pound is a stronger, better currency. So there's always good opportunities around your fibs, your 423.6, to buy a dip. And again, I'm not expecting it to go to here, here, to here, to here. That's great if it did, but I might buy it here, might buy it here, buy it here. I'm never looking for the markets to go hundreds of pips because I just don't need that. I trade too big a size. I trade too big a size to leave that money on the table. I want to take it away. So you sell the euro high, buy the pound low, and then it's, again, buying dips in the stocks. A little rare, selling the FTSE. Just I was waiting to kind of come on, but I mean, that was just, that was just shits and gigs, wasn't it? I was just interested. I wasn't really expecting the FTSE to retrace. It's just out of whack when everything else was towards the lows, like the other main markets, and that was to the highs. So that's just a good scalp. That might be a great trade for some people out there. For me, just a little bit of interest to kill 15 minutes, but still makes money. Money's money. That's what it is. That might pay for my weekend champagne. Probably not because I drink dearer champagne than that, but there we go. So, I mean, really kind of, looking back at the kind of main views and, trying to figure out this brave new world we live in, it's cutting through what the world wants you to believe, what politicians want you to believe. We've given far too much power to politicians recently and far too much power to central banks, and they think that they have, the answers. And, they don't. the end of the day, they're just people. Everyone's just people. I've met some extraordinary people over the years, many, 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 many different types of people. And yeah, at the end of the day, they're just people. So, when you we tell this big lie that we've got it under control and we know what's going to happen and we can do a model for this, or we can do a financial kind of, statistical analysis for what's going to kind of happen here, or if we do this, this is going to happen. They don't really know. It's just best guess. Everything's just best guess. And when you talk about very complicated kind of financial markets that we've kind of self-created. People have created these things, and it's not just kind of what's the euro doing, what's the dollar doing. It's everything. We've got all these different derivative markets and all these different exchange traded funds and all these different ways of leveraging off everything that we don't really know the bigger picture. And this is where, meltdowns happen and crashes happen because, one thing might lead to another that we just can't know. There's just so much money in the system. There's just so much money out there that it's almost impossible, to kind of have any sure idea what's going to happen, next week, next month, next year. So why bother? Why bother? Why bother trying to do it? See, again, it's another, so still some DAX here. So that's just, again, just a movement trade, 700 quid. Again, it's just being able to beat your computer, just kind of watch these things. And it's just kind of, it doesn't matter what the news is saying. Again, we've got a nice daily level up here. All right, yeah, the kind of stocks have moved up a little bit. The FTSE was lagging. But, every time something moves, quickly. Speed is a big thing for me in the markets. It's something, so people are going to be right, people are going to be wrong. And again, making new highs now. So if I was waiting for it to get to, the DAX to get to new highs, I could be averaging in, I could be offside in that trade. Take the money when it's offered to you. Again, when markets start to move, in a different way, just kind of like out of the ordinary. It's not always news. It's not always like, why did that happen? Why did you know to sell it, Steve? It's just, well, it was just moving. Okay, so yeah, I could have bought it because, yeah, the FTSE had turned around and the stocks were then going up. But it's like, that looks a little bit out of whack. It's down at a nice daily level. There's nothing really above it. There's no kind of levels. It's just, yeah, I can chuck a bit of size around, what's that, 160 lots, not much. You make yourself 700 quid in 30 seconds. That's how it's done. That's how trading's done. That's how you make money. But you have to have the size of account to do that. You have to have the experience to do that. You have to be able to just press the button and not really care. You've got that belief in yourself that, things move. So when things move, people are wrong. And when things move, people have to make money, or people have to get out of things that are wrong, or people want to take the money that they've made. People might have sat and analysed that chart for all day, and they've waited for that, for the DAX to break 610, and that's their trade. It's like, yeah, well, it just moved. It moved, and it moved a little bit too quick. Everything else didn't catch up. So just put a couple of little cheeky trades on there and get out. That's what happens when you've done it for 20 years. It's not coincidence. It's not like, it's second nature to me. I'm a natural born trading scalper, a killer. I just want the money. So I trade big size because I want the money really quickly. So if you put one lot on and you made 6 quid, who cares? But, you put bigger size on, you make each pip count, you see that money and you take it. You don't sit and think, well, what could this do? Is this moving for a reason? Should this go higher? Should this go lower? Oh, is this going to be the best trade I've ever done? It's like, I don't care. It's offering me some money. Yeah, it's more than most people make in a week, let alone 30 seconds. And I've just made some money. That's it. This is the whole thing, by doing these webinars for as long as I've done them, thousands of webinars, thousands. And I've wrote the book, I've written for the Bloomberg, Financial Times, Reuters, all these things that I give to people, for nothing. And my time I give for nothing, and my insight. And it's like, people always want more. It's like, I just want some more, Steve. Can you just show me that again? Well, no, that's gone. That might be the last trade I do for the next week or whatever. It was just I was sat in front of the screens. and I've seen something, that ties in with my Fibonacci. We're above the 50%, we're above the expansion point, we're hitting a daily level. I knew there was nothing above it. The rest of the correlated markets wasn't moving. The euro wasn't making, massive low strides low. It was lagging, so it wasn't kind of like making the DAX particularly cheaper at that point. So it's just kind of like, that was just a good point to scalp and sell. And you get in and you get out, and yeah, you pat yourself on the back. Good trade, well done. What's the next trade? Okay, because loads of people will be sat in that trade now from here to here, and they'll be like onside, offside, making money, not making money. Where's it going to go? I don't know. But then I'm in, I'm out, I'm done. It's finished. That trade's gone. And this is what I'm trying to say about the scalping strategy and not really like listening or trying to even understand the world anymore. Why bother? The world's not out there to do you any favors. The world's not out there to, kind of give you the green light to trade. Only you can give yourself the green light to trade. And it's how you interact with the markets. That's the really important thing, how the markets make you feel. When you stop trying to be right on direction or trying to get every pip out of every move and you start to scale up, and trade at a little bigger size and make every pip more valuable to you, to make every second of your time more valuable to you, then that's when you understand how the old school, kind of, institutional, kind of shop traders, like I was, that was I'm the original scalper, the guy sat there on the ladders, TT, and, trading pip for pip, direct market access. I don't trade that way anymore. I trade just like every other retail trader, for a couple of reasons. It's cheap, and it's cheap as chips, and it's just, it's not as good, but with the markets the way they are and the way they move, it's just as good as paying for something that, is like 700 quid a month. And again, it sounds cheap. I'm a northerner at the end of the day, Do I need 700 quid a month? No, I don't. But do I need all the things that go with it? I also don't. I can make just the same money as I ever did as a professional, shop trader as a I do now on MT4, with my broker. It's just the way it is. Everything's so accessible. Everything's right there for you. The trouble is people don't back themselves. They don't back themselves in, belief. They don't back themselves in money. How many people do you know out there that stuck 5 grand in an account because that's money they can afford to lose, but then they do that 5 times? Okay, we'll stick 25 grand in an account because you don't want to lose that. Yeah, and do that once and do it properly. Do it properly, do it, professionally, and don't lose that money or don't, draw that money down too much. And this is the battle I've always had with, again, doing these webinars on FX Street, because there's a lot of people that want to buy Bitcoin, or one of people that tell me, they want to tell me, well, I've got the desire, I want to make it work, but I don't have any money. I can't do anything. I can't help people that can't make each second, each pip, each movement in the market count. Yeah, even if you can get to £10,000, yeah, you can start to make, 2, 3, 4, £500 a day, on good moves and at the right time. And that, in itself is a way to change the way you look, because what's your average wage out there? What you earning per hour, per day, per week? You're not making 700 quid in 30 seconds, are you? Yes, I've got a big account. Yes, I've got several accounts. Yes, I've been doing it 20 years, but it wasn't given to me. I'm born in Bolton, I'm from nothing. I spent a long time building my understanding, my belief in myself to get the money, to put into trading, to be able to do these things, so to back myself. And that's what it all boils down to. So, I guess this is the main kind of problem. I guess with free education, I get tired of it, and I get tired of the webinars, and I get tired of trying to present stuff, that's going to change people's lives, because it's not. You can know about everything: Bollinger Bands, Fibonacci, candles, all the other nonsense I've talked about, risk reward. I've talked about anything. Literally, I've done thousands. You can Google me. I've done thousands of webinars. But that 30-second trade there absolutely sums up and encapsulates everything I've ever said about trading and how to make money. If you can make those seconds, those pips count, and you can trade the right kind of size, yeah, you can make good money. So again, a little bit of pain here, nothing. That could be a 2, 3, 4 grand trade, coming up. How far can it be traced? I don't know. If I wanted to, I'd get back in. Doesn't matter. If you're not there at that point in time, you're not there with the ammunition, with the bullets to be able to throw at it, then you can't do anything. Really, you can't do anything because time's your enemy and you're waiting for the market to give you something it might be willing to give. It's not about being right in direction. It's about being right at the right time, being in, being out. People so misunderstand, the term trading, and they so misunderstand the term scalping. You have to be in at the extremes, in at the danger points, in where the market's moving fast, sometimes doing what the market it's giving you. If it's going up, maybe buy it. If that's your view. Again, I've always said buy the dips, but when you're buying something, that's out of whack with the rest of the correlating markets, then it gives you the confidence just to get in and get out. Again, it's a counter trend trade, which I don't do that often, but money makes money. It is what it is. It was the right trade. I can justify it however I want, but it just certain things when you look at these 8 products. There's my window to the world, as I call it. I'm looking at the stocks, I'm looking at the currencies, I'm looking at the risk on, risk off, gold versus stocks and the kind of currency. And, if things aren't moving all together, then generally, that leads to something's happening, with a big player or with some other kind of, other, kind of institutional grade movement, because they have to remember the majority of the time the central banks, the hedge funds are all trading, baskets of products. So things are moving in correlation because they're trading the big size. When things happen out of the ordinary, that's probably something that's, something's happening on its own. And you might not need to understand it. You might not need to read a piece of news. Well, this comment came out about this, or, this comment came about this stock that's a part of the DAX or whatever. Sometimes movement is just movement. You see it, you're tied up with a couple of technicals, you get in, you get out, job done. So, yeah, I mean, if you could do that 10, 20 times a day, you're probably looking at making yourself £250,000 a year. There we go. What do you want? That's not even a big account. It's not even one of my big accounts. It's just my, one of my, not play accounts, but it's just one of my kind of my accounts that I trade when I'm kind of doing presentations and doing things. It's just money that's sat there to be used, and that's why it's all sat, to big clips. We're talking not £80 a point. We're talking 80 lots in gold. That's serious money. When I'm pressing the button, it's because I want to make money. Not because I want to show off to you guys and say I can make £700 in 30 seconds. I'm doing it because that's my job. My job is to take money out of the market, take money off other people and put it in my bank rather than theirs. And I do that by having this set up, watching these 8 products, and have done for, pretty much all my adult life, and knowing when something moves that, if there's some edge there, I want to be in, but I also want to be out. As quick as I'm in, I want to be out. I want to take the money off the table. I'm not trying to get every pip out of every move, just right at the right time and making money that makes sense to me. And that's exactly what I did. All right, guys, any questions, any thoughts? That's what we said, it's a big boys game, and I don't make any excuses. I didn't make the rules. I'm certainly not the biggest out there, far from it, but I trade at a size where it makes sense for me to do things. It makes sense for me to pay back for, for my time. And when I do things, they mean something. Every trade means something. It's even if it's just I'll have a little go. Which sometimes you have to do in the markets. I just think that's a good trade. It doesn't have to be the best trade you've ever done. It doesn't have to be, the kind of like I've thought about this for weeks and that's the trade. The market spits out money every second of every day. It's just, do you want to take it? Can you put yourself in a position where you want to get that money and take it off the table? And what I'm saying is a lot of people don't want to do that. They want to have some course, they want to have some strategy, some guaranteed way of making money, and they want to do it with £500. What I'm saying to you is that's impossible. It doesn't work. And everyone that thinks that way is wrong. And anyone that does that is doomed to failure. So yes, as always, some tough love there, some hard lessons from Mr. Ruffley, but that's just the way it is. As I say, I reckon anyone that's got 10 grand has a decent chance of making some good money. Anything less than that, you're wasting your time. I'm open to mentoring people with 25 grand and above. Always have, always will. Free. I don't charge anything. I'll give my time for free, and I'll let you again, experience the charts and experience my kind of knowledge, and not just my own trading, my 20 years of making money, but also, the insights I've got from other traders that, are on their own journey, because that's ultimately what it is. Everyone's on their own journey. Well, there we go. I've got a couple of premium presentations coming up after this. There'll be some more good stuff, maybe some more live trades. I don't know if you guys enjoyed that, but I don't know. That's real, isn't it? All the talking in the world doesn't, you know, resonate, the same as somebody, sat here doing it in front of you. But I don't know. I don't know what you guys want anymore, but if you do want something in particular, contact FX Street, and they'll be able to pass it on to me, and I could do it with you. So yeah, you can contact me. Just Google me, Steve Ruffley, steve@steveruffley.com, Skype Steve Ruffley. It's not difficult. I've got more pages on Google than FX Street. I'm I'm out there. I'm out there. I'm doing it. But yeah, as always, it's always a tricky thing, you see, because I'm trying to tell people the way the world is right now, and try to really explain how the world's been massively misled. And I mean, the average person's misled, and it's all controlled now by the absolute elite of the elite, and they just work in a different way than we do, and they don't have to worry about the bills or kind of what's going to happen the next day. They have funds, trusts, foundations. They have all things to take care of them, and I know because I've done it. I've worked with these people, and these are the people that are moving the markets right now. So no one's your friend. No one's out there to give you anything, a leg up. And what I've always tried to do is just tell the brutal, honest truth of how I make my money and how I do it and how other people can. But you have to be realistic about, the expectations of you and what you have to invest in yourself in time and money. And yeah, not everybody really likes that. No, I don't do Facebook, mate. No one does Facebook anymore. I'm not a boomer. Anyway, it's what it is. If you can't Google me, then you shouldn't be trading. All right, guys, been a pleasure. See you on the premium if you've subscribed. Thanks to FX Street and the guys, and I'll see you soon.